Hello smart money traders, welcome back to the channel. So in this video I'm going to answer this guy's question. He actually asked me to explain what is liquidity pool. I'll be explaining everything about liquidity pool very briefly in this particular video, and if you have any question too, make sure you ask me in the comments. I will take time and make a separate video explaining that to you. So what exactly is liquidity in one word? Liquidity simply means money. Why? It is because every time you come to the financial market, whether you're trading forex or stocks or whatever financial asset you're trading, you're basically trading because you are looking for money, or why the market moves is because there is money inside. So this is why we need to understand what liquidity is. And the word liquidity pool simply means an area where you have high potential of finding a lot of money in the market. So these are locations you can find liquidity in the market. Now you can find liquidity pool above old highs, that is in form of buy side liquidity. You can find them below old lows in form of sell side liquidity, and then you can find them above relative equal highs and below relative equal lows. I'm going to show you what that means shortly. Now what draws the market? Every time you see market move from here, let's take for example market moves from here to this place, is because there is liquidity that is drawing price to that area. Okay, so whenever you see market moves in that direction, it is simply because the market is looking for liquidity. Let me just give you a sketch and show you what you can expect in market. We have two types of liquidity majorly in the market. We have the internal range liquidity and the external range liquidity. When you see market creating a higher high and then a higher low, it is basically trying to sweep out liquidity in these areas. Now if market moves from here, okay, from here to this place, we have created a range, and what we said is that liquidity resides above old highs and old lows in form of buy side liquidity and sell side liquidity. Now above here we have liquidity pool residing. What that means is that whenever anybody come into this market to take a sell from here, where do you think they're going to put their stop losses? They're basically going to put their stop losses right above here. Their stop losses is going to be right above here. So these are the areas where people put their stop losses if they are selling from here, and that is basically what we call liquidity pool. In other words, pool of money. Okay, so if the market came to this area and still move ahead, it tries to get all this money. So the smart money push price from here to here, grab all this money and pocket it, because they want to always have advantage over you. So this is what we call a liquidity pool. Below here there is also liquidity pool. This becomes an old low, and we said we can find liquidity at this point too. So this is a liquidity pool, a pool of money, a pool of liquidity. If price sweep below here, it means we have swept liquidity here. So in simple words, what this means is that the smart money are always looking for an advantage over you to take all the money to fill in their orders. They come to the market with large funds, with large money, and they want to make sure that they fill in all their orders. So if people are buying from here, let's say somebody entered trade from this point, his stop loss is going to be here. And I said this time and again that whenever you enter a buy order and you put a stop loss below it, your stop loss is a sell order. What that means is that you're buying at this point. Let's say you bought it at $100, you bought it at $100, and then your stop loss is basically $90 of that price of an asset. I hope you get that. If you bought anything at $100 at this point, you're expecting the price to go up so you can make money from it. Your stop loss that you put below it is simply saying, if price decides to drop, I want to sell at $90. I don't want to lose money. So if you see smart money reach out for your stop losses, what we call a liquidity hunt, let's say this is area where all the liquidity is, and this is where people activated their trade at this point at $100. Let me just make this sketch very clearly. If smart money push price and grab liquidity here, they are actually buying at a lower and a cheaper price. Imagine buying at $100 and then buying at $90, just like this previous example, because your stop loss is a sell order. You are selling for them cheaper, they buy cheaper, and then they take price upward. So this is a pool of liquidity where all the people that are buying from this point are putting their stop losses, and then they are happy to buy from you because your stop loss for a buy order is a sell order. Okay, I hope you get that, and it is a cheaper one. That means you've lost your money at this point. So when we want to see a buy side liquidity, let's say you are selling from this point at $90 at this point. Okay, the same thing, this is the opposite of that. Your stop loss for a sell order is a buy order. Don't forget, your stop loss for a sell order is a buy order. So what you're saying is that if price decides to go up to this place, I want to buy at $100. Okay, what do you think you're saying? You're actually buying expensively. So they are happy to sell it to you at this point. That is why they push price to that area, and then they take it, they sell it for you at this price at $100 instead of $90. So this is basically what this means in a simple term. Now I'm going to show you how you can see this time and again. Now look at this. We have liquidity pool, all these areas. I have this rightly placed above relative equal highs, all these equal highs. You can see liquidity here, and then look at what price did. Price actually came after creating all this liquidity area. It grabbed all the liquidity because people that were selling from here, all their stop losses is basically here. So this is a liquidity pool. All this place is a liquidity pool, and then smart money decided to do what? To push price and then sell it for them at this expensive price because their stop losses is a buy order. Their stop losses for sell order is a buy order, and then they decided to buy above this area very expensively. Instead of $90, they now decided to buy at $100. So a liquidity pool is where all the people have put their stop losses. Now you find it time and again happening. You see liquidity grab at this point. Let me show you this example. If I delete everything, we're going to have a clear chart. Look at this area. Can you see a small push above that area? That is to tell you that smart money have reached out for liquidity at that area. Smart money have reached out for liquidity above here, and this is why you see a little push above that. And if you see these two, is a liquidity grab below this area where there is a liquidity pool below here. All this one is liquidity pool. Okay, and then we said stop loss for a buy order is a what? Is a sell order. They sold at a very cheaper price for smart money. Okay, so when you talk about liquidity pool, this is exactly what you're saying. We have a diagonal liquidity where you see this one too, just like I told you. You can see this where price reached out for all the liquidity above these old highs, then grab all the liquidity pool here, because all the people that were selling from here, that sold from here, their stop losses are here, and there is a liquidity pool there. They grab it, they decide to sell it for them at an expensive price. Okay, so whenever price push above an old high, it is simply reaching out for liquidity and then to sell it for people that are willing to buy above here. Let's check out this place above here. Price pushed above it, reached out for liquidity pool above here. All this place is filled with liquidity. And then this place, anytime you see price push below an old high or old low, it's simply reaching out for liquidity. So let's see what we are seeing right here. A liquidity residing here. This place is all liquidity pool. Price reached out for that. So when you talk about liquidity pool, don't forget it is simply where all the money are, in form of either a stop losses, or buy stops, or sell stops. So this is what it means. I hope this is very explanatory. You can go through your chart and see this very clearly. You can see them time and again. You're going to see them time and again. All these places liquidity has been grabbed. That's why you see this pushed here. You're going to see this happen over and over and over again. Liquidity has been grabbed here, grabbed here, and then even this place you're going to see it happen. Can you see? Just below this area, all this area, liquidity has been grabbed, and then price moved to that level. So this is basically the explanation for liquidity pool. If you have any question, let me know in the comments. I will answer you. Thank you guys for watching. This is not a trading model. I'm just explaining what it means for you. So make sure you inculcate all the things we've taught in this channel. You can find all the videos right here, Smart Money Concept with me. You're going to have all the important videos. Thank you guys for watching. See you in the next video.